everyone. I try to, any good journalist believes the best thing to do is delegate. So I'm going to have you all describe your companies and very quickly describe just one investment that kind of says everything we need to know about you all. I have suggestions if you don't, because I it's all about fintech. And so some of you are doing much more than fintech or define it much more broadly. But I'll start with Hero because you've been on the longest.
Sure. Thanks, Henny. Thanks, Howard, for having us. So BNext is a Singapore-based VC fund. We invest in early stage companies in India, Southeast Asia, and Japan. We are sector agnostic. We invest in consumer internet, marketplaces, fintech, insurance tech, health tech, and in Japan, we invest in SaaS-only businesses. We prefer to do seed, pre-series A, series A type rounds. And over the last 6 years, we are now in our 8th fund. We have done more than 200 investments. Fintech, we have very high exposure. And one investment I will highlight is the company that we seeded 32 months ago called Bharat Pay in India. Which just raised the last round at $910 million post-valuation money from Kotu and many other investors.
That builds on UPI, right?
That is correct. So Bharat Pay, basically what was happening is that when UPI came...
let's chat later. I want everyone to
okay.
first. But we'll get into UPI and India's infrastructure for fintech later, but that's exactly the company I wanted you to mention. Melissa, you have such an impressive resume that I'm embarrassed. Thank goodness I'm asking you questions rather than vice versa.
That's amazing to hear coming from you're a legend for all of us that have followed India in the world for the past decade or two. I'm Melissa Frakman. Nice to meet all of you. Managing partner of Emphasis Ventures EMVC. We're a global, very early stage boutique venture fund focused specifically on India and fintech innovation that's coming out of India that will have relevance to global markets. So we come in either alongside or sort of earlier than the BNext type funds because we're much smaller as a fund. We invest pre-seed to Series A. In fintech defined very broadly. So both core fintech, consumer and enterprise, as well as fintech for other industries. So sort of like digital financial infrastructure for other industries. And we're a partner to a lot of global and Silicon Valley corporates and funds as sort of their scout and partner on the ground in India doing earlier stage work and build a lot of the cross-border partnerships. An example of sort of fintech for other industries is our portfolio company Clinic, who is building a full stack healthcare subscription for mass market Indians that includes primary care as well as a very unique health insurance product that they're co-manufacturing on their own. And they're again leveraging UPI and all the digital public infrastructure that's available to offer unprecedentedly affordable insurance to millions of Indians. Even as small as $4 tied to somebody that's an Ola or Uber rider for the month. Very exciting stuff.
Thank you so much. My Zoom thing seems to have taken you all off my screen, so I will not be able to see chat. But on to you, Cindy. I've known Generation Capital for many years because you all have an office in Hong Kong. And you are mostly focused on China. And I've learned so much about, and I've watched the rise of the consumer internet through your eyes, particularly in China. So over to you, Cindy.
Sure. Hi, everyone. My name is Cindy Gong, and I'm an executive director at Generation Capital. So a brief introduction about Generation Capital. So we are a technology growth capital that focus on Series C to Series E investments in China and other part of Asia. We have been in the market since 2015. So we have made over 40 investments, private investments in Asia. So I think one example about our investments in a fintech space is Grab in Southeast Asia. So you might know Grab, that is a ride sharing company, but it is the fact that it is also the #1 super app in Southeast Asia. So its business services, its business offerings covers ride sharing, food delivery, e-commerce, as well as fintech. And amazingly, we after we invested in 2016, we see the company has expanded its presence in the fintech space, and now it's almost got full license of financial services in the Southeast Asia countries, in most Southeast Asia countries. So that's a example of our investment.
So one of the things that's interesting about Grab and its main competitor, Gojek in Southeast Asia, is that both of them kind of flipped the ride sharing model on its head. And they said, ride sharing is just one use case. Actually, payments, is interesting to us. So these are both fintech companies first, rather than ride sharing companies. But obviously, SoftBank is a big investor in Grab. And SoftBank believes that things like ride sharing are ultimately monopolies. Well, let's talk about tech and whether big tech is monopolistic. Who wants to take that question first?
I mean, let me just say 2 words. I won't use the word monopoly, duopoly, or oligopoly. But what I will say is, based on the investment experience and the things I have observed around the world, is big gets bigger. Tech has this massive network effects, and once you hit the escape velocity, you just suck in all the not only the all the dollars, all the eyeballs, all the views, and you have by the time you reach at a scale, you have already built out this distribution rails on which you can overlay as many things as possible. So it may look like a monopoly, but you will see that they are innovating on so many different new fronts all the time that business can be broken down in many small BUs. And each one is trying to build out a business that is maybe far away from monopoly, but it looks like that they may be reaching a monopolistic state, because as they get bigger, they attract the best talent, they attract the more users, and those users can be sold more services through the distribution rail that they build out. So that's how we see it.
So Cindy, does that mean, quasi-monopolies or oligarchies are inevitable?
Well, yeah, I think in the sectors like besides financial services, I think that's probably inevitable, unless there is like regulatory restrictions. But I think in China, I think in e-commerce, in ride-sharing, food delivery spaces, we see the monopoly or duopoly landscape already has formed. But I think in fintech, I think it's less likely to happen. Although we have like 2 super apps like Alipay and WeChat Pay in China, but I think they need to be like regulated by the relative like regulatory bodies, and they need to obtain the license, and they need to meet the capital requirements. So I think in fintech space, I think it's less likely to happen if compared to other parts of consumer internet space.
Yeah, I mean, China is also a special case because, you know, there's the SOEs are basically a kind of untouchables, right? I mean, you cannot take down an SOE, right? You cannot disrupt an SOE. That's just not permitted. I mean, if you start to do that, then measures will be taken, right? And so who are some of the biggest SOEs in the world? They're the Chinese banks and financial institutions, right? So along with the telecoms, of course, and the oil companies, right? So those are going to be sacred cows in China. And I just don't see how the government is going to allow those to be taken down.
So Howard, that is a great point. And many people see that either the cancellation or the postponement of the anti-PO was actually the CBIRC, the Chinese bank regulator, acting on behalf of the banks to put Ali and Tencent in their place.
Right.
And to restore what was no longer a level playing field between the banks and the Tencents and Alibabas of the world. So that raises an interesting question. So Melissa, how do you differentiate between regulation, which is choosing sides, favoring certain vested interests over the others, to Howard's point, you know, Chinese banks as opposed to fintech players, as opposed to regulation so that there aren't monopolies and there aren't oligarchies, and that there is a place that the barriers to entry for startups are not too high?
It's obviously a highly relevant question. And it's particularly interesting in the context of India, where there's, you know, the complexity of India is often discussed, but in this case, there's so many factors at play. One is the largest incumbent players. At this point, it's Walmart-backed PhonePe, Google Pay, which is very strong and has been successful in India, Paytm, Jio, Reliance Jio, the largest telecom network, which has very strong fintech ambitions, competing against literally at least 1,000, if not more, relatively strong fintech startups, varying degrees of strength, who are all going after different pieces of the pie of both consumer and small businesses' wallets. And layered on top of that, which is so interesting, is a regulatory layer of the government taking a very like ecosystem development view of building public infrastructure that really is unique in the world, not just for payments. We all talk about India's real-time interoperable payments network, UPI, but also even in terms of layers on top of Aadhaar, the biometric ID, in terms of eKYC and cybersecurity layers that are coming in. They're even introducing a new regulatory framework for data aggregation. So for any financial institution to open accounts will require this regulated third-party body to be involved. And so regulators in India tend to play a more hands-on role even than in markets around the world. But they, you know, it's highly imperfect, but they do the dance between kind of the consumer protection regulatory hat and this ecosystem development, where they have encouraged many startups to launch over the past few years, you know, on the basis of the very interesting kind of open architecture that they've built. So there's certainly no answer, and it's something that with our portfolio companies we think about day in and day out. But India perhaps is a different model than other markets to look at, where the regulator provide some of this architecture on which developers or smaller startups can build.
So, you know, India is very interesting because it's one of the few places in the world that has a shortage of domestic risk capital. You know, many of the players that you mentioned, you know, Paytm notably, 40%, and Ali, 20% SoftBank. You know, Jack Ma famously went to the regulators in Beijing and said, do you really want foreigners like Yahoo and SoftBank to have a piece of our financial activities, and was behind Beijing's disenfranchising Yahoo and SoftBank? You know, how much do you see Indian regulation as a kind of protectionism more and more, you know, or not? You know, it was very interesting to me, and one of the big strategic mistakes in my view, when Ali tried to buy MoneyGram in the States, which is a kind of obsolete remittance business model. And CFIUS said, sorry, financial data is national security. Do you think, how do you look on protectionism? Is it a good thing to nurture your young homegrown things? Or is it all about protecting vested interests? Is this kind of protectionism a good or a bad thing?
I would say, I mean, obviously there's, in my view, it's good for there to be a level playing field, including for global players, and including even on behalf of the very small early stage startups that I work with. India is, you know, in its trajectory toward being a true global economic superpower. And part of that is having kind of free, fair, open markets for global capital, for global technology partnerships, et cetera. And that being said, India also has a very vulnerable, massive population of poor. So things like capital controls or local data requirements necessarily make sense for its population in certain instances, which makes it not a perfectly easy market for global players. But there is a balance that, you know, India seems to swing back and forth. Yeah, and I should mention that, you know, there's many ways that we could sort of look at criticisms of what's happened in India over the past few years policy-wise. But one truly positive thing is that foreign investment restrictions, except for the recent China issue that happened that was based on geopolitical issues, has increasingly opened. And the insurance sector, after over 10 years, has just opened up to 74% foreign ownership, which is an issue that the insurance industry had awaited for 20 years, and now opens up the opportunity for insurtech startups to blossom. Digit just became a unicorn, but there's another 10 in the making in India today.
Hero, I'm going to turn to you and ask you an India question, which is whether you think India can leapfrog in fintech, and if so, why? And then Cindy, I'm going to have a question for you about China.
So India is actually a very unique market when it comes to fintech compared to rest of the world. India has credit cards, debit cards, UPI, cash on delivery, Aadhaar, biometric, net banking, QR codes, wallets, like as many different form factors for payments you can think of. India got one of those, which means to build out a really big successful business, ideally, you need to have acceptance for almost all of the form factors. So think about building out a tech stack in the back end that can do all of these things. So yes, India is complex, India is challenging, especially in the payments. But once you start building out things in India, you can actually take a lot of learnings and take them to Southeast Asia, Middle East, and different parts of the world. So the way we see India's ecosystem evolving, especially in the fintech, it's just amazing. We think it's still very beginning, very early stage, and there is many more companies that will come out and will innovate. And it will be probably one of the most robust ecosystem a decade later when we look, and there will be still new companies coming out. So that's how we see it in terms of the ecosystem development. Now, should I use the word leapfrogging? I really don't know, because some part of the world's a very developed payment ecosystem. So if you spend time in US, your credit and debit card penetration is very high. So you can just build out business on those rails. And they are just amazingly well built, well scaled. Visa, MasterCard are, prominent players. And then you have the acquirers coming in. In India, I just think that this new form factor will keep on evolving. So new companies will keep on coming. All I will see is that there will be much more technologically advanced fintech players from India that you can expect from India versus rest of the world.
Can I just jump in on that before we get to China and Cindy? If I could just follow up one question to Hero, and that is, when you say the India ecosystem, can you try to define that geographically a little bit more? Because obviously India is more than just India, right? I mean, India is extending to lots of other places. India is opening up to many places while it's effectively closing down to China. And so what does the future geography of the India ecosystem look like? Who is India close to? Who is India further away from? What is the atlas of geographic atlas of the India ecosystem look like?
Yeah, no, I think it's a pretty good question. And it's something I myself keep on thinking over time. When I was in New York for 10 plus years, from all the fund managers and investors, I will hear, as soon as they will compare Asia, they will say India is next China. That was the ready-made statement, everybody thought like that, but it's very complex.
It's
very
the
different.
famous chart of mobile penetration, right? There was a few years where everybody was showing the same chart of mobile phones in India relative to China 10 years ago.
Right. And exactly. But if you just think about India, first of all, India within itself is more complicated, meaning North is different than the South, is different than the East, is different than the West. So that's the first thing to understand about the country and build out the startup that cater to all those. But coming specifically fintech, good thing is, since it's a regulated sector, norms are very simple. At least in terms of country level, you can build out and scale companies at country level. Now, a lot of our fintech startups are seeing good adoption in Middle East and Southeast Asia. So to me, as of now, it seems like Indian fintechs, at least in the fintech space, the next area that are adjacent for them to expand and grow is this Middle East part and Southeast Asia part, especially Indonesia and around that area. And as ecosystem evolves and develop, it seems like the next frontier after that may be some part of the Africa. That's how we see based on our some of our companies. In fact, like going back to this UPI alone, UPI now we think.
Before we get to UPI, I just want to cut you off there because.
On that point, just wanted to layer only one thing, that UPI, which is being run by NPCI, may see a lot of inbound interest from Middle East and different part to create domestic UPI type rails in these part of the world. And that's why I think the adjacencies are more in the Middle East and Southeast Asia.
So I'm going to put you on hold once more, Cindy, to turn to Melissa. Speaking in answer to your question and Howard's point. So Melissa, I'm going to ask you, what are the constraints for fintech in India? So one of the things that I don't see in India are many interesting fintechs in wealth management, because India still is a very low income country. What I actually see is Indians expanding into Indonesia more than India expanding into Indonesia, because income is 4 times higher per capita in Indonesia. And Indonesia's weakness is human capital. So many Indians do just what you did, Hero. They moved to Singapore, they put their back office in India, And then they do things in Indonesia. Melissa, you know Zomato very well. When I look at India and see where the growth in jobs is coming from, it's from the low-end service providers like Zomato. Is the fact that job creation is so much slower in India than it should be, that a lot of that there are a lot of jobs that have no possibility of upward mobility. How much do you worry about that in India? If at all, maybe you don't worry about it at all.
It's
Because
truly,
inflationary.
this is truly gets to the fact that back to the point, Hero's good point about the ecosystem, the startup ecosystem and what's happening in the entrepreneurial spirit across India is completely disaggregated from the macro realities of what you read about the fundamentals of the country. It's obvious that India has major job creation challenges over the next couple decades, and there's many things that happen on the macro basis, including land reforms and labor reforms, and particularly making sure that its young population, half of the population is under the age of 25, has meaningful employment moving forward. But you wouldn't know it if you were in Kormangla, Bangalore, and every other startup down the road is raising a $10 million round with the opposite problem of not being able to hire people and afford because salaries are so high. And it's fascinating that, what's happening is some startups are solving these massive problems for the mass market, but there's many startups that are just going after sort of convenience or deeper experiences for the top 1% of the market. But otherwise, to your question, Henny, about challenges, getting Indian consumers to the culture of actually paying for advice or services is sort of a challenge for people building fintech in India, 1. 2 is navigating the ever-evolving public infrastructure and public utility, which is very exciting and meaningful, but does continue to evolve and change. So there's a bit of unpredictability there. And 3rd, which is an opportunity, to your point about wealth tech, is, there is a growing sort of financialization of assets and a big opportunity in wealth tech, but it requires kind of localizing models that have worked for wealth tech all over the world. So we're really excited about opportunities in wealth tech, invested in a couple great companies in this space, and we'll continue to look, as well as sort of capital markets development as the markets deepen in India.
Thank you. Cindy, finally, your turn. So Howard's point, about SOEs and SOBs being untouchable, by which he means the banks, obviously. To what extent do you think Beijing is now out to kill fintech?
Yeah, that's a very good question. Well, I think the issue we see in the past maybe 1 or 2 years is that our regulatory framework really lagged behind the development of fintech industry in China. So I think it's maybe the regulators are a little bit slow in catch up on what's the latest with the development of Alipay and with Ant Financial and with WeChat Pay. So
what do you mean slow?
Yeah, I think it's the business has been growing explosively, but I think the regulatory framework is not there yet. So I think they're just maybe 1 or 2 years of lagging behind, and now they're trying to catch up and they're trying to have all the fintech players to obtain the certain licenses, and also instruct them to set up a financial holding sort of infrastructure, which implies that they need to have capital requirements, which would limit their growth. So I think that's probably a rebalance, not trying to kill them entirely.
But presumably they're trying to shift the power balance back to the SOE banks and other financial institutions as part of their goal, right? And also to not allow too much economic and therefore political power to devolve into these decentralized, so partly decentralized places, right?
Yeah.
So Howard,
yeah.
if you have a fintech company as your client, what advice do you give them today? Is the best thing they can do is to become banks? You know, obviously Tencent, WeBank, has a very different model than Ant is. But what do you advise a fintech company, and what do you advise a bank? Would you say to a bank, you're never going to be able to lend to SMEs? Your credit metrics are totally outdated. You know, therefore you should buy a fintech company. What is the future of the financial sector in China, where the regulators are determined to tilt the playing field back away from fintechs toward the banks? What advice would you give a fintech company, and what advice would you give a bank if they were clients of yours?
Henny, are you just talking about China, or are you talking about other?
China.
Just
China.
China? Well, first of all, if you're not a bank in China, it's very hard to be a bank, right? So it's not really necessarily an option, especially if you're a private party, to become a bank, right? And so if you're a fintech, if you're starting out as a fintech, it's not like you have an option in the US to go and get a bank, right? I mean, there are a lot of fintechs that have banks here or have become banks here or have control, have deep relationships with banks. In China, you kind of have to stay as a fintech. On the other hand, the banks themselves, whether, I guess it depends on whether you're an SOE or you're a smaller, mid-sized, they're all SOEs, but smaller bank or one of the large banks. I mean, if you're one of the large banks, you're basically part of the establishment. So, you're going to stay as part of the establishment. That's a very comfortable place to be. If you're a mid-sized bank and you're an SOE, I guess I would try to grab as much technology I can and become much more savvy and fast and data centric as possible. But I don't think the choices that you are talking about, which might apply in the West, really apply in China. You really don't have those kinds of options. There just really aren't that many options in terms of structuring, I don't think. Cindy can correct me if I'm wrong. Actually, we only have a few more minutes here, so I wanted to just throw in one other question to Cindy on fintech in China, because China is the elephant in the room, or the other elephant in the room in Asia. And I guess the question, Cindy, for you is, there was a point in time when China was going global and certainly going big regionally in Southeast Asia, right? And certainly they're making a big effort in India. They're certainly pushing very hard in Southeast Asia. The India effort, for geopolitical reasons, is basically at a dead end right now, right? And so, and certainly China still has the Belt and Road Initiative in a lot of places, but how serious an opportunity do you feel that is for Chinese financial institutions and Chinese fintechs outside of China, because of the changing geopolitical environment, and given the fact that China is a huge domestic market where the biggest success stories have been domestic so far, regardless of whatever area of tech you're talking about, other than TikTok, so how do you think fintechs in China are thinking about international opportunities now, given the current situation?
Yeah, sure. So I think from my perspective, I think fintech normally follows the real business. I think for China, their overseas kind of internet presence are mostly in the e-commerce space. So I think in past 2 and 3 years, we see lots of the overseas like cross-border kind of e-commerce players emerged, like Shein in US and some other followers of Shein in the Middle East and the other part of the world. I think the fintech, like the payments and other services, will follow those businesses. So I think there is still opportunity, but I do think there's like geopolitical risks. So when we review those opportunities, the first question we always have in mind is like the geopolitical risk. But I do think China has like advantage in manufacturing. So I think for other part of the world, they're probably gonna welcome the cross-border e-commerce kind of business model from China.
Right.
So I think,
for example,
yeah.
the consequence of what you've just said is perhaps if you're in fintech and you're involved with trade finance, for example, and China is such a key player in supply chains of almost everything. So therefore, they need financing for that. So of course, if you can provide that financing, there should be relatively little geopolitical risk, right? I mean, at least less than a lot of, and if you're out there by yourself trying to do fintech without the underlying client base of Chinese companies going global, then of course you are much more exposed. Whereas if your client base of companies is Chinese companies that already have an established international business, then you basically are on their coattails, so to speak. Is that what you're saying?
Yeah, that's correct.
Yeah.
It's too bad, Howard, that we don't have time to go into supply chain finance and blockchain and all those interesting things. I have one more question, and that's a yes or no for all of you because we have so little more time. And that is, will borders and national governments matter more or less over time for these fintech startups? All of you, yes or no?
I think
Yes.
it is yes for China.
Yes, for Southeast Asia, India.
Yes, meaning they matter more or they matter less?
Yes,
They
they
Matter more.
They matter more. Okay, right.
I think everyone feels that way. Howard, do you want to wrap up?
No, I learned a lot from this panel. I agree with the last point, by the way. I think national borders are coming back. They're making a big comeback, unfortunately, or whatever. And you know, some of the startups today that we're presenting in our event were, for example, stopped at the borders of the US because they feel that US regulatory regime is too tough for them. And so they are keeping themselves out of the US, right? And that's a national border. So it's, and then of course, a lot of companies are hesitating going into China because of the geopolitical and other risks associated with that. And then you have these issues between the, you know, India and China, and you know, so there's quite a few geopolitical issues or other related issues that are translating into national border issues too. So great. Well, thank you so much, Henny, for moderating this great panel, and for all of you, Hero, Melissa, and Cindy, for your insights and comments. It's been a great day, and I hope that we will reconnect soon in person, even though we're still in the middle of the pandemic. Hopefully, it'll be over soon. So thanks again, and hopefully next time
you'll all in Bonnie Doon.
Come to Bonnie Doon next time.